Palantir is one of the most exciting stocks to trade in the market at the moment, with a huge bullish uptrend ongoing which saw its price going up tenfold in a very short period of time. It's been an amazing and rewarding journey for anyone who stuck around for Palantir, as things are definitely looking on the way up for this powerhouse of tech stocks. With that being said, if Palantir is a trending stock in the market, it remains a company that few people truly understand, with angles that are not always very clear to everyone buying the shares. Many are simply jumping on the bandwagon to make sure they don't miss a life-changing opportunity, which may cause some issues down the road. Whether you like or hate it, Palantir is definitely a stock that should be better understood in order to benefit us. Hey everyone, I hope that you're having a great time and making lots of money. In this video, we're going to talk about Palantir and see if it's a good fit for you. As the company keeps the public very interested and intrigued, it has reached many milestones for a company that has been trading just below 1/10 of its current value not that long ago. The company's operational break-even and profitability saved itself from the abyss, and then the AI craze, along with the changing political wind, led the share price into a new phase of exponential growth. Palantir is now officially part of the major league, and its share price entered into the price discovery phase, where even the sky may not be the limit. Most people have been holding the bag when the market suddenly tanked around 2022, and in that difficult context, many were simply hoping for a recovery to minimize their losses, if they had any hope left at all. Instead, the market gave us a triumphant return for anyone willing to give the company time in order to expand its operations. With the financial landscape moving thick and fast, it wouldn't be surprising if new all-time highs are made in the days and weeks to come. The market's volatility has always been a very sharp double-edged sword, but when trading Palantir shares, it works in our favor. As one of the more symbolic companies of a data-centered digital age, Palantir has been keeping the market's hope up to offer a safe haven for anyone looking to commit their assets in equities. AI may not completely save us just yet, but the financial market is definitely feeling and benefiting from its blessings, and Palantir is no exception. Over the past few years, Palantir has become way more than yet another tech unicorn begging for our money in exchange of pretty keynote presentations. It is now a major player in a sector that may tell us about what the market appetite for risk exposure will look like, and whether there is a rising tide ready to raise all ships coming our way, or a black hole to bury the dumb money. Palantir not only shows us where the trend is going to be, it also reinforces and sets new trends that may benefit the market at large. And in this video, we will take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Before this video continues, I just want to take a moment to thank each one of you for coming to my channel, and hope that you will enjoy your stay here and to come back for more. If you like what you see, please consider to like, subscribe, and to check out my channel for more content about Palantir and other companies I may cover. With that being said, I hope you're gonna like today's video, and let's continue. So, let's begin with the price action of Palantir and see how it's currently doing. After experiencing some recoveries towards the end of last week, Palantir has performed well on Monday, with the stock back to $87 in correlation to the wider recovery tendency of many other tech stocks in a challenging and confusing economic context. This round of sell-off was initially triggered as Palantir announced its intention of selling $1 billion worth of equity, as well as Pentagon's announcement of budget cutting. Its current market cap is now almost back to $200 billion at around $199 billion. It's possible that the recent international news have been adding more uncertainty to the investors' trust in equities, which had a negative effect on Palantir's stock. But the setback was so severe that on many occasions, most people, myself included, we have asked ourselves whether Palantir can stay in its bullish phase. Because as of now, this trend has been on the verge of being reversed. So things are now headed towards a more stable, better status quo for the weeks to come, around the region of $80 to $90, unless there are additional catalysts coming our way. As of now, the 52-week low is $20.33, and the 52-week high is $125.41. Palantir has been experiencing its own path in the market as we speak, as traders have been hoping to see Palantir at a higher price point, as many of them are looking for a safe haven away from the uncertainties on the outside. It's worth mentioning that the current phase is mainly fueled by the market's negative expectation of Palantir's outlook, but also the fear that their plan to park their money in a safe corner is, potentially in jeopardy. So a lot of this is and has always been collective wishful thinking or collective fear-mongering that currently translates into large movements in one way or the other. In the short run, there has been a resistance around $85, over the past 2 weeks or so. So if the price action can move and stay beyond that level for the days to come, I do believe that additional bullish demand may be on its way to come. Now, the market volume remains very high due to the volatilities in both directions, but of course, on a relative basis, it has been a bit calmer than before, currently at around 92 million shares a day versus the 30-day average of 124 million shares. Palantir is one of the rare big caps with a very large retail participation, and its volatility usually benefits from this more active and emotionally charged trading style. With that being said, even with the ongoing volatilities, the relative volume is down. Like I said, probably because we're just waiting for more catalysts after the current one have been priced in. Unlike many tech startups, Palantir is pretty sensitive to major trends in the real-world economy. Financial data, changes in key policies, and election outcomes can all influence Palantir's price action. The recent presidential elections turned out to be very good news for Palantir and the market at large. Peter Thiel, co-founder of Palantir, has always been a pretty close supporter of the president. The company has been maintaining and developing its relationships within the public sector for a long period of time, especially in defense, healthcare, customs, law enforcement, and also intelligence circles, all of which may happen to be key aspects of the Republican agenda. Despite having contacts on both sides of the aisle, it's obvious that, ideologically speaking, the company is much more in sync with the current administration, which certainly helps for a company that has significant exposure in public contracts. In terms of media coverage, most outlets tend to follow where the price action of the company currently goes, and most often try to explain the present instead of predicting the future. Some are, of course, suggesting caution given the recent gains accumulated so far despite a very high valuation. Many suggest that Palantir may be on the cusp of even more catalysts and growth going forward, given the change in the economic environments in the years to come, the interest rates decrease, and the potential changes in terms of geopolitical events. The articles themselves may not be worth analyzing one by one, but the overall tone set by the media landscape tends to be a forerunning sign of trend continuation or reversal. The stock's price action has been able to hold itself above a very high level so far, which is still very low compared to where it is now, because the last time we've seen any sort of support, it's been around $50. And the valuation of Palantir is fueled by the company's own performance, surrounding environment, and the eagerness or the willingness of investors to find somewhere safe, to find a refuge in an uncertain environment in an uncertain time. A lot of people have been looking to find a decent entry point to make a comeback to the equities market, and when the Japanese market tanked a few months ago, that was the last opportunity to enter below $30. Given the composition of its shareholder being more retail than institutional, Palantir has been a stock made of momentum and a large dose of anticipation, along with the self-fulfilling prophecy that comes along, instead of level-headed analysis of its current numbers. Nobody is here, at least most people aren't here, to buy the Palantir that already is, but to own the Palantir that people hope will become in the next few decades. Any rational analysis of the financial results can only justify the present or the short-term price actions ahead of us and maintain it at a high baseline. Certainly not enough to push it to new highs, or at least not to the extent people wanted to buy Palantir for in the first place. We can see the market reacts far more significantly to announcements of new public contracts gained instead of other kinds of announcements. To a fault, Palantir remains very heavily dependent on the public sector, and it certainly shows in the price action. Looking back, the last region with the most supports seems to be $50. And now I would say that $100 is also an interesting region to look at due to its psychological significance. The current consensus around Palantir is that the market wants to keep pushing the stock up, and that they're constantly looking for more catalysts from the rest of the potential shareholders before making the next move. Since Palantir is still in the price discovery phase, a lot of people also believe that the world economy is in a funny position, and that some massive corrections may also be way overdue. So we should definitely be prepared for any sort of scenario of that kind. But rest assured that from a longer-term perspective, Palantir has a pretty interesting price action pattern compared to the all-time highs a few years ago, because it's now already beyond it, way beyond. So there's a lot more potentials regarding where it might land next. Palantir is a tech company created back in 2003 and went public in late 2020 at the peak of the last market boom. It operates in the data analytics subsector of the tech space and has been one of the leading companies in that area. It is known for its position-taking, the relationships with public sector actors, and its engagement of key members such as Peter Thiel and Alex Karp. Another aspect that sets itself apart from many of its rivals is its proximity with the intelligence community, as the company relied on seed funding from the agencies back in the earlier days. No one ever shouts from the rooftop that they want to do evil, but Palantir certainly doesn't shy away from more delicate situations by working with public sector agencies in legal, healthcare, border control, defense, and law enforcement. Simply put, it is a company that doesn't mind being portrayed as evil and almost wears it as a medal of honor. In fact, shortly after it went public, Palantir decided to move its headquarters from the Silicon Valley to Denver, Colorado. This move was more than a pursuit of lower overhead or a change of scenery, but a statement about the public image it wants to portray. The market has always shown a lot of interest in how the company and the stock are doing. The fact that it went public when the bullish sentiment was sky high in the tech sector could have been a contributing factor, As the world was preparing for a fundamental change about how societies would function in a place where more interconnectivity happens while remaining remote from anybody in the physical world, a technological and societal utopia that was deeply flawed and never truly came to be. Palantir shares attracted the market's attention mostly because its narrative was the right fit in the right time, as the tail end of the quantitative easing era mentality combined with the pandemic era dream of interconnectivity and never-ending financial boom, while capital was looking for a safe haven from the uncertainty and the collapse of the real-world economy outside of our screens. In a way, Palantir symbolized the answer we wanted to slap on all our problems, and for some time it was made true by the supply and demand of modern finance. We are interested in Palantir's promise of reaching ever higher price levels, a promise that seemed set in stone when large quantities of money were pouring in a company with deep pockets backing it up, as the world was preparing to enter in a new era of endless growth and prosperity. This bullish and very optimistic narrative about Palantir has been backed up by the numbers. Financial information has been known to move the market as stakeholders want to have their assumptions validated by something concrete. Gross margins, cash flows, and revenue growth are some of the most sought after data points that people want to know about Palantir when they do their analysis. The growth margin measures how profitable Palantir truly is at the core. Beyond the quality of its marketing campaigns, the hype around its projects, or its brand power, gross margin tells us whether there is enough demand for what the company is selling, and if each additional dollar covers the additional expense that the same dollar generates alongside. To that end, Palantir is a very successful company with a decent profit margin, even when the shares were trading below $10 during the last sell-off period. This was the first sign that Palantir is more than just an empty promise begging for your money. The business model is something that can be scaled up and marked up because it has true fundamental value and it is validated by the market and its clients. Once the core business model has been validated, cash flows tell us whether Palantir will need to go through cash injections to keep its operations going. And very often, a tech startup may ask shareholders to pitch in even after they bought the shares, because the funds collected from equity sale is not enough to cover the operating expenses. If that were the case, it would be a sign of weakness from the company because it would mean that the company's own operations are not profitable enough to stand on its own 2 feet. For Palantir, that problem is also non-existent, because its cash flows have been positive for quite some month, mostly because its operations are profitable and it doesn't need to dilute its shareholders to keep the lights on. However, these numbers are not enough to push Palantir higher. The most important factor is the growth rate of revenue, especially from public sector. Like many other tech companies listed on a Nasdaq, people buying Palantir want to buy the powerhouse to become, not the decently profitable company that is. This would also explain the high multiplier that Palantir is currently enjoying compared to many other blue chips companies in more mature sectors. This is a double-edged sword for those who want to dabble in the tech field in general, but for Palantir, the public sector aspect is an additional side to watch for. Since most of its growth does come from the public, any additional partnership with healthcare, defense, or law enforcement departments may trigger massive upsides for its shares. On the flip side of the coin, every time an existing partnership ends or a scandal makes it to the headlines, Palantir shares may see a dip that could take a few days to come back from. These 3 measures are what define Palantir and may explain its dynamics in the market in general. It is an interesting company that people are putting a lot of hope into because its financial results are good and do suggest that Palantir has the potential that people claim it does. Because Palantir is a highly specialized and unique company that is praised for its technical expertise and noticed for its position taking by its management and shareholders, it's always been the center of a lot of interest, talks, and speculations from the market stakeholders, as well as the media outlets. Along with Nvidia and Tesla, it's probably one of the most talked about companies in the world, despite the fact that it has a much lower market cap than many other blue chips companies. Hardly any day goes by without an article to be written by major media outlets about how Palantir is doing, or where they believe it's going to land. The coverage can be relevant in two ways for our analysis. The articles can give us a feeling or a sense of what is the current market consensus about what happened and the mood that is the most likely to influence what's going to happen next. Their tone is often determined by the price action at that time and plays the role of current trends amplifiers rather than contrarians showcasing potential trend reversals. Even if it's not a crystal ball allowing you to see where the price is going to go next, it can always tell you what the current sentiment is, which may allow you to take a hint of what the next move may be. The second level of analysis is more basic, but also more useful. It is not about the content but the quantity of the coverage. Depending on the number of articles written about Palantir as well as who writes about it, we can have a rough estimate of how popular the company, the narrative, and the sector are in people's mind. Alongside the potential upsides, entire economies may benefit from this as part of trickle-down liquidity from risk-seeking capital. Ultimately, papers want to sell clicks, just like investors want to get alpha. If there are shining bubbles in the market, news outlets are usually very fast to pick them up, validating the overall direction of any subsequent bull runs. The number of articles currently indicates that the market is interested in what happens with Palantir, and the anticipation is a further increase in price when the interest rates begin to decrease and fall. We just have to be careful about the limit of analyzing news articles, as they tend to describe the direction the wind is currently blowing, but far less effective when it comes to predicting where things are going to go next. Now, obviously, since you're looking up about Palantir, chances are there are unique aspects piquing your interest. Trading or investing in Palantir does come with its own upsides, including its unique profile, its potential growth rates, and the existing stability. Palantir is a company operating in the data analytics subsector, which is a very promising place, lots of favorable talking points and potential vectors for future growth going forward. The world is getting more digital and analytical on a daily basis, as more and more business decisions will need data-driven information in order to make that call, as well as to optimize daily operations and locate the trends of the future. Palantir has been trading for a few years, but its existence dates back more than a decade ago, and its expertise does bring it head and shoulders above many of its rivals. It has deep relationships with deep-pocketed public sector departments in defense, law enforcement, and healthcare that we talked about, all of which require Palantir's digital solutions for their planning and decision-making. Unlike many of the Silicon Valley unicorns, Palantir also doesn't pretend that it doesn't do any evil or that it lives in a perfect world. The HQ move to Denver, along with the Davos speeches of its CEO Alex Karp, do suggest that Palantir is willing to take on the challenges of the future and that it's not afraid to say so out loud. The relationships established by Alex Karp and Peter Thiel, two of the founding members of Palantir, have opened many doors in both public and private sectors, allowing Palantir to cruise on the trends. Recently, it also announced that it's going to participate in the trending AI field, which is one of the main reasons for the stock to go from $15 to $30. In addition to all this, Palantir does have a layer of stability that many of its rivals don't have, and that can be seen in its cash flows. Palantir's cash flows have been in the positive for some time already, which is a rare advantage above many of its competitors because it means that a company can sustain itself in terms of the needs and doesn't have to beg investors for more cash injections in exchange of dilutions. With that being said, investing in Pltr also comes with a few unique downsides due to its company profile and the characters of the sector itself. Being a company that analyzes data for a living, Pltr will be more exposed to potential legal problems compared to other industries. Since the topic of data privacy, ownership, and proper usage have been under heavy scrutiny from the past scandals with social media, how Pltr acquires, processes, and safekeeps those data while serving its clients can be open to legal battles, which may cost the company its image, reputation, its bottom line, as well as future opportunities to get more contracts from government agencies, the same agencies that may require these data that were maybe used under inappropriate circumstances. It's a bit ironic, but that's probably the way it's gonna go. My theory is that since this is a touchy, delicate area of this economy, and no one wants to rock the boat, meaning no one wants to take on the blame if anything bad actually happens, in that case, it's possible that Pltr may take on the loss without having the capacity to shift any of the blame to other stakeholders. Because if they do that, they're going to rat on other people, and maybe they don't have the opportunity or the luxury of doing this. The other thing to consider is the potential decay of the narrative's value. AI and data analytics are very popular topics now. They're trending in the market, that's for sure. But what would happen if they stop being so popular once a newer sector has been created out of thin air or come back from disgrace? If we look at what happened with electric vehicles, we may see a similar drop in interest for data and AI, along with a potential drop in their market cap value for companies like Palantir. So, what these additional risk factors mean for anyone really looking into buying Palantir is that it is a blue chip sized tech stock with the volatility, or arguably with the volatility of a startup, mostly held by retails. Trading comes at a significant potential price volatility cost, and investing does require a fairly high tolerance of uncertainty. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Having said all this, my recommendation for Palantir remains consistent with what I've always suggested before, which is to buy it for the long run and slowly trickle in for the short run because of the ongoing bullish trend. The market needs catalysts to start a new phase of exponential growth if investors look to get back into the game, both as a safe haven for flight capital as well as a token for optimism for the future. The share price does look a bit steep at the moment, so if there are pullbacks in the upcoming weeks and months, we should definitely take them. In terms of exposure, I would recommend between 8 to 10% of your portfolio and to gradually make those purchases over the next 18 months.